Hey guys, Stock Saturday, and it's been a rather green week in the markets. S&P sort of up a couple of percent, and sort of Nasdaq doing extremely well, 4.5 odd percent. I'm up a couple of percent, so you could say sort of underperforming the market. It's kind of expected with this sort of portfolio. UK sort of not doing too bad. Still sort of haven't had the urge to spend my cash, so still got sort of quite a lot of cash in here, sort of waiting for something to do with it. Not convinced by this sort of more recent rally. Not a lot of sort of change. I did get somebody used the free link, free share link, and I got £60 worth of BMW, which was unusual. Normally they're a tenner. So if that was any one of you, then thank you very much for that. Got sold straight away, of course. No interest in holding BMW, so that's on the cash pile. But yeah, having a look at some of the sort of earnings that have been coming out, sort of lots big tech, Apple and Amazon and all them sort of been releasing their results. Don't look quite so good, but the market still sort of seems fairly happy with it. So just looking at some that sort of affect me more directly, you got Shell released their fourth quarter 2022 earnings and looks incredible, really. So sort of for the full year, they were sort of looking at nearly $40 billion in adjusted earnings compared to 19 last year. EBITDA of 84 billion. So it's slightly down from last quarter, 21.5 billion to 20.5 billion, and yeah, cash flow up for the quarter. So all looking rather good. Gas sort of still holding up pretty well. Oil not doing quite so well. Obviously, sort of earlier in 2022, oil was at a much higher price, so that's kind of expected. Chemicals sort of doing really well, and renewables was up. Just sort of, yeah, I had a look through their sort of broken down results. All looks pretty good. Upstream sort of not doing quite as well as expected. Chemicals is sort of pretty good, kind of more steady than the other sectors. But the key thing I was sort of interested in was more sort of spend in renewables, and they haven't got any more in production. Still sort of building. So still 2.2 gigawatts in operation, but another 1.2 under construction and committed to sale. So 6.4 gigawatts in total, which I was pretty happy about. Obviously, longer term, there is the sort of concern that a very profitable oil and gas business will sort of shrink down with renewables maybe not making quite so much. At some point, the sort of world is going to, I guess, have enough renewables that they won't need to price everything in gas terms, and yeah, that'll sort of potentially mean worse earnings for sort of the energy business, and I guess even gas prices as well. But I guess we've got to go that way. We've seen companies like Chevron and ExxonMobil basically sort of double down, triple down on oil and gas, not really sort of investing too much else to sort of diversify. So short term, that's sort of good for profits, and they're doing sort of buybacks and large dividends and stuff. Shell are doing buybacks and increasing their dividend, but yeah, Chevron and Exxon are sort of that on steroids basically, and longer term, presumably, it's not going to be so good unless they sort of suddenly spend a fortune and diversify. We're going to need oil and gas still, longer term, but not so much, I guess. On a slightly more negative note, I guess, Sylvania Platinum's results is kind of expected. You can sort of near enough track their earnings to the prices of platinum, palladium, and rhodium, which have all been down sort of in the last quarter, but nothing sort of too bad. Normally come down to their table. I think the table's sort of very good. Compares it to last quarter. I kind of think with a lot of companies, I would rather they compared to last quarter rather than the same quarter last year, because a lot does change in these businesses, or maybe show both. Some of them will show the previous quarter and then the same quarter last year. But yeah, I sort of tend to prefer previous quarter. But so we've got recovery ever so slightly up on this quarter, but basket price down, so you would expect a drop in revenue. And yeah, 36 million, 37 million down to 33 million in revenue. Net revenue down as well after the sort of adjustments. Operating cost sort of stays largely the same, so it just means a drop in net profit, 18 million down to 13.5 million. So yeah, that's not horrendous, I guess, for they are 220 million dollar company. Yeah, capital expenditures up. I guess this is sort of rising energy prices amongst various other things. And cash balance down from 138 million to 124. This was after paying, I guess, the substantial dividend, 8p per share, on a sort of £1.5 stock. So, and it wasn't. It was about 90p then when they were paying the dividend, if I recall. So, yeah, a chunky dividend, and now that cash balance should tick up. But yeah, I thought overall it's reasonably good, as much as you can expect with the metals prices coming down. So not the end of the world. Very interesting week for Meta, Facebook, and I guess people were expecting worse than they actually came out with. Stocks up 25% this week. So it's done this before, sort of more on the downside. We had a 40% drop, I think, last year. But yeah, people are very sort of emotional, it seems, over this company. Revenue compared to this quarter last year is sort of slightly down. Costs up, and sort of net profit down from 10.2 billion to 4.6 billion. I guess obviously people have been pricing this in. That's no huge shock, but things don't seem to be getting tremendously better. Your sort of family of apps stats were all sort of slightly up, 5% year on year. Daily active people, 4% on daily active users, and yeah, monthly active users 2% up. It's all kind of small numbers, and again, they don't sort of give the increase on last quarter numbers. I haven't checked whether, I assume they were either sort of flat or maybe slightly decreased. I'll have to go back and just check over last quarter. Again, sort of comparing to last year is maybe a little bit lagging. But yeah, advertising sort of doing okay. Ad impressions up, but not doing all that well on revenue, so getting less money per ad. Just looking at their balance sheet, seems to be sort of not all that good. Cash sort of down a couple of billion. Marketable securities down 5 billion. Guess that is sort of maybe a drop in price rather than them sort of selling them off. I don't know. I don't think they sort of reveal quite in too much detail what they have in there. But yeah, so total assets up due to property, plant and equipment. 22 billion increase in property, plant and equipment, so they're still building tremendously. And yeah, liabilities, I sort of covered last time. They've took on some debt, which most people weren't sort of all that happy about. Yeah, so liabilities up 19 billion with the sort of expenses and other bits and pieces. So equity basically flat, up 1 billion, and yeah, just coming down to the segment results. This is kind of a little bit disappointed with. Advertising sort of down as sort of we would expect, but Reality Labs revenue even down compared to last year. I think I sort of highlighted this last quarter as well. Not too impressive, even down on the yearly. And obviously they're piling money into it. I would have kind of hoped to see at least revenue up. Probably expecting a greater loss because it's sort of still building for the future. But they bought sort of gaming companies and things that I've sort of highlighted before. I gather some of the gaming companies that they've bought, they've sort of put their games on hold while they sort of develop something for the future. So could see a drop in there, but yeah, I'm not sure whether sort of where exactly they're putting Oculus sales as well. I guess the sort of sales of that may be down. But yeah, not too good. A operating loss of 4.2 billion for Reality Labs compared to 3.3, and up 3 billion, 3.7 billion on the yearly, with revenue down. So not all that good, but people seem well happy with these results. Obviously, whether they were expecting it to be worse, sort of shot up 20 odd percent, 30% I think it was on the day. So guessing people were sort of expecting a lot worse. Forecast hasn't really changed a huge amount. Obviously they've laid off a load of people, so costs will come down, but yeah, nothing I saw to be sort of hugely excited about. And stocks up 100% I think from the lows. So it was a good buy if you bought down there or sort of averaged down. I believe I am, yes, showing sort of 2% down, but I think with the FX move I have gone green on it, sort of 5% or so I think. So yeah, I'm not looking to buy at these sort of levels. It's back to sort of a fairly priced stock with sort of a bet on the Reality Lab side, which you're certainly not getting for free or anything like that anymore. So yeah, it's not one that I'm holding it, but yeah, I wouldn't be looking to buy it anytime soon. And just having a look at the news, quite a bit of news this week, as expected. You got sort of UK credit news, not looking all that good. Sort of consumer credit down, mortgage approvals down, certainly a lot lower than was expected. Mortgage lending and sort of net lending to individuals. I don't know where they keep getting these really bullish forecasts, but yeah, that was sort of forecast for an awful lot more and didn't do so well. Provisional EU GDP was slightly positive, 0.1%. They were expecting a very slight decline, but yeah, nothing sort of too much on there. The US house prices were expected for sort of a reasonable decline and ended up sort of a slight decline, 0.1%, 8.2% up on the annual. Our housing market not faring nearly as well, was forecast for minus 0.3%, same as the previous month, and we got minus 0.6%. So this takes the year on year to almost getting towards a decline. Obviously that's lagging. I tend to look at the monthlies. I think you've had 4 straight months of declines now. Sort of previous months were bigger as well. So yeah, UK housing market not looking all that good. Provisional CPI figures from Europe, worse than expected. Core CPI down 0.8%. So that's quite a change, and that's not energy and stuff. That's the core, excluding food and energy. So Europe getting sort of, I guess, near-term deflation. The monthly ordinary CPI was negative, but less so. So unemployment up ever so slightly for the EU as well. 6.6% though, is quite a high number. And then you had the interest rate rises. So basically all as expected. Fed did their 4.75%, a quarter of a percent increase, and it was basically came out and said, far from job done. They've got a lot more to do. Sort of basically leaked that they're expecting 2 more quarter of a percent interest rate rises, possibly at the next 2 meetings, and then sort of hold them. He said they don't expect to cut rates all of this year. And again, market sort of took it really well. Don't know what exactly they were expecting him to say, that he wants to crush the economy or something. But I didn't really see that as too positive. It's going to push US deficits up, and sort of would expect something to break from sort of holding it at sort of 5% or more all of this year, once they do the next quarter of a percent rise. So yeah, very unusual. UK did 0.5%, sort of as expected. Less sort of important, I guess, on the Bank of England side, with the greatest respect to us, but yeah, we're a little bit less important. ECB did 0.5%, sort of as expected. They're sort of catching up with everyone else and sort of being very, very hawkish. And then the US job market still sort of doing really well. Continuous unemployment, jobless claims down from expected, new claims down. And then we had the US payrolls on Friday, which was, I guess, a bit of a gaffe by the analysts. Last month, non-farm payrolls, 260,000 jobs, and they were forecasting 185,000 for this month, and come out 517,000. So, yeah, a bit of a gaffe. Manufacturing was 6,000 expected. It's a very small sector, sort of in the US, but that was 19,000. Yeah, private sort of similar. And unemployment, last month they sort of predicted it to go up to 3.6. It didn't. It stayed flat. And this month they predicted it again to go up to 3.6, and it come down to 3.4. So really, really strong job market, I guess, in the US. I haven't dug down. People do sort of dig down and find some sort of interesting nuggets in these figures. Sort of non-farm payrolls, maybe, it could be lots and lots of part-time jobs, and they sort of count one person taking on 2 part-time jobs as 2 people employed, and that sort of thing. Is various sort of stats that you can not necessarily take the huge green number as a positive, but yeah, I'll probably dig into people's thoughts and the breakdowns more of that. And similarly with sort of unemployed, if people sort of say that they've stopped looking for work entirely, then they don't necessarily count as unemployed anymore when they don't have a job, so they are kind of unemployed. And yeah, and then we had sort of some PMIs and that sort of thing, which was relatively strong from the looks of it. Non-manufacturing business activity, these are sort of less important, I think, from sort of a global standpoint, but yeah, business activity was better. And the one that people do watch is the non-manufacturing PMI. As I say, sort of manufacturing is quite a small sector in the US, so when they exclude that and look at sort of everything else, that was slightly negative, below 50 last month, expected to be pretty flat, and that was 55. So anything above 50 is positive, and that was very positive. So I would guess this is just more of a sort of license to raise rates, keep them high, and be hawkish for the Fed. So very surprised they took this so well. I mean, it means the economy is doing well, and maybe people will expect a soft landing. But who knows? So yeah, as I say, not too much change in the invest account. Stellantis now sort of gone into the 10,000s again as a position, and emerging markets doing quite well. So got three 5-figure positions now, if you don't include cash. And Hymax and Taiwan Semiconductor sort of hot on the heels. Shell doing reasonably well. Vale had a drop with the sort of metals not looking quite so good. Rio sort of a very slight drop. Yeah, not too much sort of move in the rest. On the ISA side, there was a little bit more movement. I spent another £1,500, foolishly upping my Nvidia short. That's gone terribly, of course. Really didn't expect Nvidia to be sort of where it was, but there you go. And I put another 1,000 into the Nasdaq 100 short, which again, it's going far higher than I expected. I have said before, I'm quite happy for these to be dropping. If the market's going up and the Nasdaq's rocketing up, then most likely crypto is rocketing up. So I'll make far more than the drops here on the gain in crypto and the rest of the portfolio. So these were just kind of a hedge. And if we do go down, then I might probably won't make profit on these overall. It'll maybe just come back down to somewhat close to break even. But there you go. And yeah, Silvergate Capital has sort of rocketed back 38% up on the week. So I'm now down about 10%, I think, including the FX. I believe JP Morgan, not one of the, I can't remember who it was now, one of the big banks has sort of made an investment into it. And yeah, people saw that as positive. Might have been BlackRock. But yeah, it does seem like they're not going to be dead. It's just whether they get a huge fine from the FTX scandal. But we'll see. Not one that I sort of average down on. Would rather just sort of be buying other things or crypto direct if I wanted more crypto exposure. Obviously, this was a bad sort of trade from selling Argo blockchain. Should have held on to Argo a little bit more and then sold. I still maintain that I would have sold. I don't think Argo's a good hold, but there you go. And yeah, IG trading sort of hasn't really moved a huge amount, other than obviously Silvergate, and Hive blockchain moved a little. Atalaya mining sort of doing quite well in the green as well. Pan American silver, I am kind of with the drop in silver, especially on yesterday, kind of wondering whether to add to either Pan American or First Majestic. Sort of thinking silver maybe do a bit of a bump. It does tend to disappoint people, silver, so we'll see. And Chinese tech not really moved for the week. So very interesting week. Let me know how you guys are doing, and yeah, what you're buying. If you're sort of not keen on buying anything with all these rocketing up green stocks, and like and subscribe. See you soon.